Hi everyone, it's Jason here and welcome to another Crypto Traders Classroom lesson. Today we're talking corrections and I particularly want to focus on some of the key differences between a zigzag and a flat correction. So I've got a couple of examples that I want to show you, and what I want to do is just go over some real-time price action, just highlight some of the key differences between both patterns, as there are a few things that you do need to be aware of, particularly when you're trying to decide between a zigzag and a flat. So just having a good understanding of both patterns will help you going forward, potentially help you avoid some of the pitfalls, particularly with regards to trading a flat correction. So the first example I want to go over is a zigzag. We're looking at a token called Verasity. So one of the key differences between a flat and a zigzag is the actual characteristics of the price action. So a flat correction tends to be a time-based correction, whereas a zigzag correction tends to be a price-based correction. So you'll see a correction that is trending on a zigzag, whereas in a flat correction it tends to move sideways, so essentially waste time. So that's one big difference between a zigzag and a flat correction. But the more important difference is the structure of wave A. So in a zigzag, wave A will be a 5-wave move, but in a flat it will be a 3-wave move. So one of the first things you can look for is to decide if wave A is a 3-wave move or a 5-wave move. So if it's a 5-wave move, then you would suggest it's a zigzag, whereas a 3-wave move would suggest that the move is going to unfold as a flat, although there is the option of a double zigzag, i.e. wave W. So a 3-wave move itself doesn't necessarily rule out the idea of a double zigzag, but you would lean towards the idea of a flat and remove the zigzag option off the table. So in this case, on Veracity, the initial drop from these blue wave 5 high appears impulsive. So whenever I'm looking at structure, I'm looking at the characteristic of the price action and trying to decide, is it impulsive or corrective? So is it a 5-wave looking move, an impulsive looking move, or is it a corrective looking move? Is it a 3 or 7 swing move? In this case, to me, it looks very impulsive and suggests that this is likely wave A of a zigzag and not wave A of a flat. So that's one of the first things that I noted when I was looking at this particular price action. So just having an understanding of the initial price action, trying to decide if it's a 5 or a 3, led me to consider that this is likely wave A of a zigzag. So we also need to see further price action to complete waves B and C. So we need to see a 3-wave move for wave B, followed by another 5-wave move for wave C. And as you can see, we've got a 3-wave move for wave B here, and then the subsequent decline from these B wave highs appears to be in 5 waves. Now, there are going to be times when there are some minor issues within a particular pattern, as is the case with this wave C. Now, it isn't the cleanest looking impulse waves. However, whenever there is some ambiguity with the price action, what I tend to do is just step back and just have a look at the price action, just evaluate it on its own merits. And when you take a step back, you can see that you've got 5 distinct waves. And when you look at this particular price action here, this looks like a triangle. And as we know, triangles are also seen in the 4th wave position of an impulse. So that would lean towards the idea that this is indeed an impulse unfolding from these highs. So that would further suggest that this initial drop is indeed wave A of a zigzag. The 3-wave move is wave B, followed by the decline in 5 waves for wave C, thus complete the scenario that I suggested, and that a zigzag has actually played out, i.e. a 5-3-5 pattern. Coupled with the fact that the reaction from just below the equality projecting target between wave C and wave A also potentially suggests that this is indeed a 3-wave move. and we've now got an overlap of the wave A extreme. So rather than suggesting this is wave 1, 2 and 3, the fact that we've got an overlap here with the A wave extreme suggests that this is likely a zigzag. So we do have a bullish setup here now against this extreme, this wave C extreme here. So against that low, we are bullish and looking for a move higher. And one of the clues that we look for whenever we're trying to suggest a pattern, and this goes across the board for any pattern, is complete, is to wait for a reversal signature, such as a 5-wave move followed by a 3-wave correction. So in this case, we can actually label the 5-wave move as an expanding leading diagonal. So a 3-wave pullback would offer a bullish opportunity against these lows for potential move higher. Further price action above the wave B extreme, which suggests that this decline is indeed a 3-wave move, i.e. 535 to complete a zigzag, and a new uptrend is unfolded. The key bit to highlight here is the initial drop. The initial drop does not look like a clear 3-wave move. It has the characteristics of an impulse. It's impulsive looking, and which suggests that it's wave A of a zigzag as opposed to wave A of a flat. So let's just move on and note some of the differences between this particular pattern, i.e. 535, and a flat pattern, which is actually still developing, but we've got enough price action to suggest that it's likely a flat. Actually, it's actually an expanding flat. So first thing to note is that we've actually got a new price extreme. So that in itself suggests that it's not a regular flat, it's actually an expanding flat. So when wave B makes a new high or new low, and it actually retraces more than 100% of wave A, then we label it as an expanded flat as opposed to a regular flat. So if this actually remained below the origin of wave A, the origin of wave A is actually here, then we would label it as a regular flat. But because it's actually made a new price extreme and we trace more than 100% of wave A, then we label it as an expanding flat. However, what I want to do is just highlight some of the key differences between the prior pattern, the zigzag 535, and this current pattern, which I believe is an expanding flat. So first thing to note, whereas in the other pattern, Verasity, VRA, actually had an initial impulsive drop and there wasn't a clear 3-wave move, Rocket Exchange, RVF, actually shows a clear 3-wave move. So when you look at this decline from these purple wave 1 highs, you can see is a down, sideways, down move. So this sideways consolidation suggests that it's actually the B wave of a zigzag. So straight away, the fact that you actually got a 3-wave move removes the idea that indeed this is wave A of a zigzag, because wave A of a zigzag would be a 5-wave move, not a 3-wave move. Furthermore, you can see the clear looking 3-wave move here, so there's no way you can force a 5-wave move here. So just by knowing the price action, what we expect for a zigzag versus a flat, obviously we can rule out the idea of a zigzag at this stage, regardless if indeed it made a new high or not. Now the fact that it obviously made a new high also removes the zigzag off the table, because wave B of a zigzag cannot retrace more than 100% of wave A. However, because we've got the 3-wave move anyway, I wouldn't be labeling it as wave A of a zigzag. If anything, I possibly would have labeled it as wave W of a double zigzag. However, because we've now seen a new price extreme, that also removes the double zigzag off the table, because wave X of a double zigzag cannot retrace more than 100% of wave W. So you're now left with the expanding flat. 3 waves down, followed by a 3-wave rally to a new price extreme. Thus, we need to see a 5-wave decline back below the wave A extreme. And one of the problems with the flat correction or expanding flat correction is the fact that it actually corrects in time. So whereas I mentioned before with Verasity, i.e. the zigzag corrects in price, so let's just go back to that one, i.e. you're seeing a trend-based move, so down, sideways, down. So that's actually a trend-based move for a zigzag. In the case of RocketX, let's go back to that one with the flat, you're seeing that it's actually moving sideways. So this is actually a really good example to see the differences between the characteristic between the two patterns. So the actual zigzag is a trend-based move, so it's correcting in price, whereas a flat correction is actually trending in time. And this is one of the pitfalls of trading an expanding flat or a flat, is that in the case of a regular flat, you'll see a 90% retracement of wave A, so it gets very close to the origin of wave A, and a lot of people think that it's actually going to break out. So in this case, you'd see a lot of breakout traders try to preempt the move to the upside, only to see it reverse and break down. So basically, it's a bull trap. Obviously, seeing the new price extreme, a lot of people are going to get bullish and thinking that the uptrend has resumed, only to see another move back below the wave A extreme. So these are treacherous patterns, and if anything, I would suggest trying to avoid trying to trade these patterns. I realize that there is a potential trade here to the downside to trade wave C. However, I've seen numerous B waves of expanding flats morph into much more complex patterns. So you could see another spike back above these extremes, and then you see the 5-wave decline. So I tend to avoid trading expanding flats. So if I can establish that an expanding flat is unfolding, or I think an expanding flat is unfolding, then I tend to just move to the sidelines and wait for the remainder of the patterns to unfold, and then I'll step up. So in this case, I would wait for a 5-wave decline back below the wave A extreme and complete wave C, and then look for evidence of a turn higher, i.e. a small 5-wave move in the opposite direction, buy the 3-wave pullback, and then you've got a low risk opportunity. But at this stage, because you've basically essentially gone sideways, there is no real edge to the pattern. So in the case of the zigzag, we can just monitor the actual price structure. So the zigzag itself is much easier to count and trade. So once we've got the completion of 5 waves for wave C, then we can step up and start looking for evidence of in the case of Verasity, a turn higher. In the case of RocketX, because it's just generally gone sideways, we need to sit and wait for the remainder of the pattern to unfold before we turn bearish. Hence, this is not a great pattern to trade, and I certainly wouldn't recommend trading this unless you've got some experience of trading this particular pattern. The better option is just to sit on your hands and just monitor the price action. So I'd be inclined to just suggest waiting for a move back below the wave A extreme, and then you start looking for potential evidence of a reversal higher. Although in the case of an expanding flats, a common target for wave C is where wave C equals a 1.618 multiple of wave A. So that actually could see a potential move towards the 18 cents level before this C wave is done. Although I'd just be looking at price structure. So we're looking for a 5-wave decline back below the wave A extreme, and then we start looking for a turn higher to complete the correction and some evidence to suggest that this correction is done and a new uptrend is actually underway. So just to recap, key difference between a zigzag and a flat. Wave A in a flat is a 3-wave move. Wave A in a zigzag is a 5-wave move. And the actual characteristics of the pattern are different in that a zigzag is a price-based correction, so you'll see a trending move, correct the price, whereas in a flat you'll see it correcting time, so you generally tend to see a move sideways, and that actually sees a lot more time wasting, so it tends to frustrate traders, i.e. you get them bullish and bearish at the wrong times, only to see the market reverse in the opposite direction. That about does it for this video. If you've got any questions about the video, or if you've got any other topics that you'd like us to cover, feel free to drop us an email. Thanks for watching, and I'll catch up with you in the next video.
Keep your trader education going with 3 short videos a week. using real markets, real charts, with real learning. 3 times a week, published every Tuesday, Wednesday, and Thursday, our Crypto Traders Classroom instructors give you a new video lesson to show you how to combine Elliott waves and other technical indicators to achieve that confident market view that every trader strives for. Learn more by following the links in this video's description. Thank you for watching.